Hello and welcome to episode 28. This week we reveal who won the battle between Nordic American Tankers and Oxford Lane Capital. We get a portfolio update and we battle two more stocks against each other with this week's theme of who's got the biggest discount. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Clearly scared to dip our toes into the water, Nordic American Tankers are out, and let's take a walk down Oxford Lane Capital.
3, 2, 1, go.
Last week was an absolute disaster, with the Battle Royale falling a massive 2.8% and even underperforming the benchmark. This week, no better whatsoever. Our stocks are falling even further. The benchmark down now 3.8%. The Battle Royale doing slightly better with falling only 3.6%, but somehow that doesn't make me feel too much better this week. Looking at the biggest movers in our portfolios explains some of that poor performance. Reddit, Black Rifle Coffee and Spotify Technology all falling by over 10%. Reddit as much as 17.2%. Looking at the important updates explains a little bit of that. Black Rifle Coffee missing analysts' expectations, and even Adidas outperforming expectations did not help rescue us this week. One thing we can take slight solace in is that the US market performed even worse than us, falling 3.4% over the week. Looking at our total returns, though, doesn't make for necessarily very good reading. On the beach, still way up top, and the green doesn't last very long. Our newest arrival, GoLub, it's fallen 1%, but because that's paying us big dividends, we're not too worried. Loads of red, though, and the bottom is just getting heavier and heavier. B&M down 34.4%, and even coming all the way up to Renew, that's still 20%. And yeah, double figures everywhere. Not looking great. We're now up to 26 holdings, and as you might have guessed, last week was not kind to us. We've got 14 making a loss and only 12 making a profit. Thank goodness for our dividend-paying portfolio. It's now up to £19.03 per annum. That's up from £18.58 last week. Our December payment of £2.43 is being added to now £3.44 in March, and those two added on the 27th when it pays out will be £5.87 to a lucky subscriber. We've now added £650 into each of our three portfolios, and as of last week, things were looking okay still. We were in the green, we were making a profit. However, this week things have changed. We've got two portfolios in the red now. Of our 650 added, the Battle Royale is down to 623, making a 2.8% loss. The benchmark, not quite as bad, £641 left in there, down 1.3%. Only the income generator still above water with 660. Hopefully things turn around soon.
3, 2, 1, fight.
We all know it's been an absolute bloodbath in the market these last couple of weeks, if not longer. But for us savvy long-term investors, we all know that's a reason to buy, not to sell. And so I'm taking a look at which stocks have been the most discounted and have benefited the most from that bloodbath, and let's invest in those. The first job to do is to find those heavily discounted stocks. And yes, you could use a stock screener, or alternatively jump onto a financial market summary that you trust. This is Hargreaves Lansdown's one, and I've gone onto, in this case, the FTSE 100, and I've gone into their whole index performance, sorted it by the last 3 months and from worst to best. And as you will see, there are some great contenders for this category. Ashtead dropping almost 30% over the last 3 months. We've got WPP, JD Sports, Rentokil, Whitebread, Glencore, Bunzl, Melrose, Associated British Foods. There are some great contenders, and I did the same thing with the US. Just out of interest, the best performers were some unsurprising names. We've got Rolls-Royce, Lloyds, BAE, Coke, and of course Standard Chartered. But I've narrowed it down, and our first contender is Greggs. If you have a look, it's this is the 1-year stock graph. You can see it's been pootling along okay, but there was a massive drop in January, and jumping over to the 3-month, you can see that it's fallen 32%. over the last 3 months, which is just mad. So that's a good contender for a good stock. JD Sports was our second one. If you have a look, it's also had a steady downwards trajectory over the last year, and over the last 3 months that has fallen 25.64%. And the last one to mention from the US is Nvidia. Surprise, surprise, it's fallen 20.89% over the last 3 months. So that is very tempting as well. However, it's not just about how much it's fallen, because that is not a good way to buy stocks. Is it good value? Simply Wall Street thinks Greg's is 50.9% undervalued, which is fantastic. If we look at JD Sports, it's 54.0% undervalued. No points for guessing why I've picked those two. And Nvidia is also apparently undervalued at the moment, which makes it a very, very tempting stock. That's not all to look at. Is there any future growth? Not all roses for Greg's. The earnings growth rate and the EPS growth rate are both negative, so that is a slight concern. JD Sports got a massive earnings growth and EPS growth rate of 22.5 and 21.5, and Nvidia, the darling, surprisingly similar to JD Sports, but very healthy nonetheless, 20 and 20.5. Anything else going for these? Well, Greg does have a very nice dividend of 3.7%. That JD Sports doesn't match. It's got 1.2, and of course Nvidia barely pays a dividend, 0.04. They've all got good financial health, good past performance, so it will come down to what you think its future looks like and what you think is the best valuation at the moment. So there you have it. Which one's the better company? Which is the better discount? Which has got the best value? And ultimately, which one do you think we should invest in? Please vote in the comments below. Thank you so much for watching, everyone. I hope this week is kinder to your investments than the previous ones have been, and I hope you have a fantastic week in investing and in life.
Goodbye.